All right. Um, Luca, so sorry about the rant. Sometimes I get a little bit too intense. Ah, fuck. I got out of this too early. So, I just got home and I saw this literally because Trump is talking right now. He's speaking, I guess. So, I don't know. He said a few things and this thing collapsed. This thing, oil was at around 61.20 and bam, look what it did. Flushed here into 60, mid 60s. That's something I would not ever hesitate to buy, but I wasn't quick enough because I wasn't at my desk yet. And I kind of chased it up here, literally buying at 80 something, got out into 61. I could have stayed in. Okay, so just I'm not even gonna think about this. I can't chase it up here now. So stupid. All right, so uh, basically quick review of the day. So I'm down. I mean, I'm up actually. I'm up like I don't know, maybe like 250, $300. But commissions, so account balance is negative. This is my first day after resetting because I reset this morning. So, um, I'm pretty upset as well. It was not a great day for me. And let's start with, okay, with CL. Oops, CL. And let's go to 1 minute. So I guess, okay, so we start the day knowing that we missed this trade. This is a trade that we were prepared for. We would have taken it. Um, I guess I get too late. I guess I get to the desk too late. I had 620 marked. I see a reclaim here of 620. This would have been a good trade here into this area. Fine. So I miss it. We already went over this. We have, you know, backside breaks out of this trend line here. I want to get an entry here off of the 620s after it dips here into a 615 and I miss it again. So I miss the whole move. So this already indicates to me that I am hesitating, that I'm not, not um, hesitating. Basically, when I see it come here, I shouldn't be thinking too much about it. I already know, and I should be getting in. And then if it doesn't work, I should be getting out. I shouldn't be ruminating over it in my head, and it's just so that's not a good sign. So I missed this. I trade the double top here and I take this short, but that's something I would never do, especially on this today because this thing is like anything can happen. It can just go up, and like nobody should be shorting this right now. So, okay, I get away with that. It's okay, but but it's I'm just revenge trading because I missed this, which is your real trade. Now, and I said that to myself and I put it in chat and everything. Now we just have to wait for the real thing to break out. So we got as we discussed at the end, it breaks here below the 660s, comes down into this support area in the 620s. I wasn't around. I don't I don't really know why I wasn't around here to buy this. I don't know what I was thinking or where I was, but I didn't. And this would have been an opportunity. Actually, I was watching it again. It was hesitation. So I guess that's the main problem for me today. Hesitation. I remember I drew this trend line and I said, okay, this is, um, you know, it's approaching here the 620s. This could be reversing. And I thought about getting in and I didn't get it. So same thing. And here we have, um, sort of like a volume exhaustion here, got soaked, and then maybe a little bit here. So it was clearly respecting the level. It dips into it a few times, and it wicks and it gets soaked up and pops up, bounces a little bit. So this would have been, an easy. I remember thinking here. Actually, I remember thinking, "Fuck, why am I hesitating so much?" And I missed this little move. Would I have like held here up into these? And probably not, but at least this little bit I would have captured. Um, so what happens here? What happens here is um, Trump tweets something about Iran, and then this thing pops. And obviously it's basically doing what we said that we wanted to see, which is a break, a blast through that down trend line with a strong, you know, volume capitulation candle, and that's exactly what we got. Um, but I was again hesitating and a little bit too late, and I did end up buying, you know, this little pullback here when it when it you know it was a so this was a tweet. This is important because it was not just an organic breakout. It was a tweet, so it counts as breaking news. And the problem with those is that and I didn't think about it at the moment, but typically when you see a huge gap up on anything coming from a breaking news thing, that first gap up is typically it's like a blip and they sell hard into it. And then if it finds a bottom is when you should trade it long. So unless you capture it down here, you shouldn't really be longing here. I did long it here on a pullback here, and I was offside for a little bit and uncomfortable, but I kept holding it because I believed that it was going to keep going a lot. And then I was in it, and then I believed so much that I got really aggressive, and I added a lot of size here, and in the end it ended up like rolling over, and I ended up being caught here in the backside, and I ended up not making any money on this. So the lesson here is I should have thought about this being a move on a tweet, as opposed to just an organic breakout, um, because there's a difference. Because these gap ups on breaking news always get faded, and then we see if it's going to start going. And in this case, it didn't really go. It kind of like the 6180. If we go to like a higher time frame, that's an area of like this is the top of this here, 61 or whatever, 60, 6170, something like that. It's this area here. There's a lot of liquidity there. So, and this is gapping up right into that liquidity. So, you know, it didn't quite go. Got rejected, getting rejected here again. So it's still in play, but it needs to flush out a lot of volume, and it needs to trap, and it needs to do what it has to do in order to then continue up into the 62 area, which is the area where if we take out the 62s, that's where we have that volume void, that vacuum where there's no liquidity, and then we could get that move, really strong momentum move between 62 all the way up into like 70, baby, 69, 70. So, but we're not there yet, and this thing still needs to set up. So that was a mistake I made there. It was thinking that this was, oh, it's breaking out and it's just going to trap a little bit here, and then it's just going to bam, keep going. No, that's not is not what happened. The opposite happened. This thing got sold, and it got like driven back all the way down. So I mismanaged that. I should not skip this, but before that, a very important thing. So the key thing here, I've been hesitating all day, but the other key thing is I was not trading from a position of strength. I was trying to dig myself out of a hole, because this is what happened. Gold, I think it was in gold. This is what happened when the CPI print came out. What time was it? 8:30. Okay. I guess it was this little blip here. So I made a mistake. So I had this thing. I can't remember this right before the print. There was this thing kind of, they gave us a flush. I guess it was this one, flush here into the low 600s, and I bought that one, and that was good. And I sold it up here. So I already had some P&L accumulated. I don't know, like $200, something like that. And then we get the print, and this thing gaps up, but and I had an order. So this was here, like trading here, right around the 608, 609, and I had the buy stop order was at around 611. And what happened is this is the issue of not being of it's all mental. It's all you have to be, calm and collected and focused and not overreact and not be emotional and not be scared or not panic, these sort of things. And here I don't know why, I was pretty anxious before this thing. And I even told myself, which I shouldn't have, but I told myself to do this. I said, don't even look at the ladder, pay attention to the chart, and the second you see a blip of green up, you just mark it out. And that's exactly what I did. And what ends up happening is that green candle was nothing, was nothing. I had an order at 611 and I saw the green candle and I just hit out. It marketed it out. It turns out that um, the bids were still, because the spread was really wide at the beginning and the bid was still below my entry. And I ended up marketing it out and I ended up thinking that I was nailing the trade and I ended up losing money. So cutting my P&L in half or even more. And I was like, what the fuck is going on? I didn't know what was going on because I wasn't even paying attention to the ladder or the numbers because I thought this is going to be too quick and I don't want to screw it. And that was a mistake. It was a mistake. It was like a under appreciating my ability to do it. And it turns out that this move, it does end up going up here into the 20s. It took a while. It took like, look at that. One, two, three, like five. It took like half a minute, like 30 seconds to get up there. I could have easily calm, you know, be okay. Where are we on the ladder? Okay, we're pushing here against the high teens, and then let it go, and then go. So it was a winning trade that I just panicked out of it and completely ruined it because of my stupidity. And then obviously, what happens after that? I go on tilt. I'm extremely upset, furious because I gave back more than half of my P&L because I botched the trade that which should have been a winning trade. And then I did exactly what you did. I tried then to start randomly to start trading gold. But there was no edge there. There was no edge at all. There was no reason for us to be trading gold. There's no setup here that's telling us this thing going up. This thing is a long. The fundamentals weren't there either. We got a print that was literally, it nailed the expectation, so it wasn't better or worse than what it was expected. It was exactly what was priced in. So there's no reason for the market to move. There was no edge at all. If it had been like a really high print, and then we're like, okay, maybe gold is gonna just rally because of inflation, whatever. None of that was on the table. So there's no reason for us to be trading gold. And in my case, it was just I was on tilt. I was revenge trading. I was trying to make back what I lost, and instead of making anything back, I end up digging myself in a $500 hole. Um, um, that a few minutes later I try again and I ended up going up to $600. That's literally half of my daily stop. So that was really stupid. So that's the other lesson is one, what I don't know what was wrong with me today. I'm kind of trading scared. I need to my I need to literally grow a pair. Is like where the fuck are my balls, right? Like why am I so wishy-washy? Why am I so hesitant? Um, it showed up in my trading later, but it showed up here. This was a product of not being assertive, of being a fucking a pussy. I don't know, like why am I like, oh, let me close my eyes. I don't want to see. I just want to see a green candle and get out. That's really stupid. So that was sort of my problem today. And then okay, I'm in a $600 hole, and that may have had an impact or an effect on why I traded, oil so badly as well. Thankfully, and this is good, and I'm glad I'm able to count on this, is that I used to avoid trading the open in equities because it's kind of wild, the tape is wild and so forth. Now I love trading the open, and um, and well, I'm fortunate that I'm able to trade this stuff. And when this guy, the guy that's building the algo, he was talking about fading the deltas. I was trying to tell him, but I guess he didn't care. But that's exactly what I do when I'm scalping in a range. I'm literally just fading, positive delta up here, negative delta up here, and at the bottom. So when I see it's basically stuff that you can see on the tape. So I was down like $600, and I made most of it back here. I made like $400, just by scalping here this little range. Um, and yeah, that's I'm happy I was able to do that. So um, in the end, I end up the day. It's important that I keep track on this because this is the first day of resetting the account. So I end up with a day basically break even, minus 100 something because of commissions, and not a great day because if I hadn't done this really stupid thing, if I hadn't gone on tilt and tried to trade gold, it would have been a pretty good day. I would have made good PNL here and scalping NQ, and then I would have maybe I would have traded better that oil trade. The other thing that needs to be mentioned is, why am I choosing to trade gold? I think this is because, again, my insecurity and my, sort of like, yes, I'm kind of trading scared and insecure today, and I'm not, you know, really confident in my trading, and that's probably when I'm just making all the wrong choices. So I'm kind of sticking to that. When I was used to trade with that guy, um, that I've told you guys about, the guy, the prop trader that used to trade with Axia. So he always he traded gold on these data releases because, in his opinion, it was a little bit less volatile and there was a little less chances of you getting wicked out on one side and then on the other one. But that guy trades with 100 lots. So he can trade gold and make a few ticks and still make a killing. But I have a fucking tiny little eval shitty account. So, um, gold did that little bit where it went from 11 to like 23 or something like that. But we'll look what NQ did. It went from 9/11 on literally let's on the first, literally just this first candle, from like 9/10 or 9/11 to 9/70, like 60 points. And I'm not even counting any of this. I probably wouldn't have stayed in for any of this. Just this gap up that happened literally in 5 seconds. It probably happened in less than that. It was probably only, this is a, oh, let's go to 1 second really quick. I just want to know how fast that gap happened. It's kind of important. Um, yeah. Okay, 1 second candle. So this is the first gap. The 1 second gap went up into 950s. Comes back down. And then this one, 940s. And then this one ends up going to 960s. So the first candle, literally the first second, bam, wicks up into 950. If I mark it out there, I guarantee I capture at least 30, 40 points there. That's enough. That makes my day. That it hits my base hit, and that was the idea of taking this trade. So why am I trying to trade it in gold when I know that NQ is going to make a much a better move with a lot of range and stuff. So that was the other the other thing. And then, so let's go back here really quick. Okay, you told me that you were shorting here. I'm guessing it's because it was a double top. After a double top here, it's testing here again. I don't know. Well, you need to tell me why is this an A plus for you? Why is that trade um, a trade that you're upset about missing? Is it an A plus setup for you? What are the variables that go into it? What do you want to see? You know, what's what's telling you that it's a short? When would you enter? Where would you exit? All that stuff. And especially if it's a setup in equities where there's no real fundamental reason for you, there's no edge on the fundamental side. Well, what's telling you that you can commit to a trade like this? So you need to just articulate it, send it over. Um, um, got sidetracked there. So yeah. So again, oil still in play. I'm kind of upset that I missed this. This is stuff that I shouldn't be missing. Um, this bounce here. This is free money. In any event, it is an indication that anytime that this thing is flushing, it's being bought up. This is being bought up. There's a lot of big players, volume here that they're any chance they get, they're absorbing because they know that this thing is going higher. So it's just a matter of waiting for this to set up again. There's still a lot of edge in oil because the Iran situation is escalating more. And that's it. The last, I guess, last bit here of commentary again is um, regarding when we were talking about setups earlier, and I sent you a text about why setups were important and stuff. Look at it like this. This is a good analogy. It's not a perfect analogy, but it kind of works. And your trading, like you're basically it's a business. It is your business. You are it's like a small, like a startup or something, or a business. And um, the your trading setups are your product or your service, or whatever it is that you offer. Um, you can't you cannot imagine, for example, starting a business or having a business where you have all your things in place, processes in place, and like um, and you have a budget and you say I'm going to spend this and blah blah blah, and then somebody comes and asks you, okay, but what is your product? Describe your product. What are you selling, or what is it that you're making, or whatever, and you don't have an answer. Like you're like, well, I don't know. I just go, we just all go get into a room every day and we brainstorm and we try new things and stuff. Well, then you don't have a product, so you can't build a business around something that it's not there, there's nothing. Going into a market and trying new things and trying gambling around here and there and thinking, you can't build a business around that. Impossible. You cannot. You can only build a business around something that is tangible, that you know how much P&L, how much it costs. If it were a real product, it would be, okay, I know how much it costs to make it. I know, I have, all the supply chains figured out or whatever. And I know then how much I can sell it for. And I know what revenue I'm going to get if I hit my sales goals and so forth. Well, in trading, it's the same thing. You have a setup that it has more or less, you have a good idea of what if it has positive expectancy or not, or what's the the expected value of that setup, and how much you expect it to yield every time it plays out. You know how much it costs because that's under your control, because you determine how much you're risking on it. So that's something that is under your control. So you know how much it'll cost for you. You know how much you lose every time it doesn't play out, and you know more or less how much you gain from it, how much P&L it creates when it does work out. You need to know that setup like the palm of your hand and know every single variable about that setup, because you need to imagine that you're pitching this business to a venture capitalist or somebody that's going to give you money to run the and you need to convince them, well, this is what we do. If you tell them that what we do is we go into a room and we just play around and watch the market and try different things here and there, nobody's going to give you money to fund that. It's impossible. So everything starts with a setup or a group of setups or basically a playbook. And that's why we playbook, because we need to have these setups super well defined, all the variables well defined. Not just the setup itself, but the other thing that I mentioned. When do the setups work and when do they don't? And what kind of markets do they work and what types of markets do they don't? And then if you have a few setups, then you need to define these type of setup work in this type of circumstances, but they don't work in this type of circumstances and so forth. So that's, kind of important. And I thought that was a good analogy. Anyways,